And I think this is very, very bullish, right? And it's not just bullish over the next 3 months. It's not just like a little hit. No, this is bullish over the next 3, 4, 5 years. We could really be in for a very long secular bull market here. We're looking at, 10 times as much money that has ever been involved in Bitcoin, hitting the Bitcoin ecosystem.
Renowned businessman and mathematician Fred Krueger explains why he believes that Bitcoin could experience a continuous, parabolic surge over the next 5 years. In his recent video, Krueger analyzes a chart by Matt Hogan that reveals how Bitcoin's consistent returns over the years have actually aligned perfectly with expectations. With this, Krueger advises caution, stating that while he is uncertain if 2026 will be a negative year, he does anticipate considerably more double-digit returns. In fact, he predicts a 100% return in 2025 and possibly a 75% return in 2026. Let us now view clips of Fred Krueger as he explains his forecast. Give this video a like to show your support and subscribe for your daily dose of crypto news. We hope you enjoy.
Stop, you don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
And I think this chart, really illustrates exactly what's going on. It's just annual returns. So we see, we've had obviously the first 3 years were exceptional, right? With Mt. Gox doing 5,000% in 2013. So it was up 50x in 2013. Then the crash of Mt. Gox. Then we have the sort of second bull market culminating in the 14x rise in December. It actually it went higher in December, right? But it only shows up as 14x. Followed by the 75% retracement, followed by almost the same kind of thing, but on a much more muted scale in the next cycle, and then we have this cycle. So, I would caution that do we expect 2026 to be a big negative? I'm not so sure it will be. Do I expect more double-digit or returns here? Yeah, I do. I think triple-digit. I think we're going to get 100% return rate in 2025. We might have 100% or 75% in 2026. This is going to be a great 4 years here. So, and by the way, this is only half done. So we're in pretty good shape. As Matt says, we're exactly right on target. And I agree with this. This is an exciting time to be alive. It's an amazing time to be involved in Bitcoin because you're really getting in before this sort of tidal wave of money has had time to sort of deploy. So just to recap, I think, we're looking at, 10 times as much money that has ever been involved in Bitcoin, hitting the Bitcoin ecosystem. And they're going to have to buy this Bitcoin from people like me. That's just a fact, and guys like me don't want to sell their Bitcoin. So that's going to push the price higher. It's supply, it's demand. I think that the numbers are extremely compelling.
In other news, Bitcoin remains confined within a narrow trading range, with its latest attempt to surpass $72,000 stalling. After briefly reaching $71,700 following the European Central Bank's rate cut, Bitcoin fell near $70,000 before rebounding to $70,600, down about 1% in 24 hours. Market analyst Skew noted significant spot selling on Binance and Coinbase, along with an increase in short perpetual futures positions, which pressured prices. Data from CoinGlass indicates high leverage around the $70,000 to $72,000 range, which could lead to liquidations if Bitcoin breaks out in either direction. The broader crypto market also experienced a pullback, with the CoinDesk 20 index down 1%. Tokens like Uniswap, Chainlink, and Near fell by 3% to 5%, while Injective gained 5% due to a tokenomics update aimed at reducing supply. Despite Bitcoin's struggle to break past $72,000, analysts anticipate an imminent breakout to new record highs due to favorable macroeconomic conditions. Central banks in developed economies, including the ECB, Danish Central Bank, Bank of Canada, and Swiss Central Bank, have begun easing monetary policies by cutting rates. There is speculation about whether the U.S. Federal Reserve will follow suit, given recent data showing softening inflation and economic growth. The upcoming U.S. employment report and inflation data could influence Bitcoin's price movement, potentially triggering a new all-time high. Standard Chartered's Jeffrey Kendrick maintains a $150,000 year-end price target for Bitcoin, anticipating a breakout if economic data supports rate cuts. Now, here are more clips of Fred Krueger.
If you look at the wealth that's in America, you have 20% is self-directed. That's people who trade for their own account. 40% is managed money, so that's people who trade, who make investment decisions for other people. And then 40% is institutions, so pension funds, insurance companies, other people who manage money institutionally. And until this ETF, which happened on January 11th, you had no way for these 80% of these institutions to take part in this market. And even the other 20%, they really had to do something, an extra step, right? They had to either self-custody, which is incredibly complicated for the average person, or they had to trust an exchange like Coinbase or Kraken, which although they work fine, they're not FDIC insured, they're not common names, they're not like, Schwab or Vanguard or Fidelity or something like that. So until very recently, let's just say 90% of the people either were completely shut out or just they're basically very highly incentivized not to partake in the Bitcoin marketplace. And that all changed. Now, it didn't completely change overnight because, again, as Matt said, the fact that the Bitcoin ETF was approved doesn't mean that it's going to be approved on all the platforms. So, for example, I have an account at Goldman Sachs. I can't buy Bitcoin ETFs on Goldman Sachs. Same with Morgan Stanley. Same with a lot of places, right? And so we're still in this sort of rollout phase of the ability of these platforms to offer the ETF to their users. So, and furthermore, finally, if you look at, the advisor market, that market takes a while to kind of get going. And why does it? Well, they've got to make two kinds of due diligence decisions. First of all, they have to decide really if their firm wants to be involved in Bitcoin. Some people don't. Vanguard doesn't. They don't believe that Bitcoin's a real asset. They don't really like gold either. Other people are just looking at Bitcoin very, very much for the first time, right? So, if you're a pension fund or an insurance company, you have all this mechanism for looking at stocks or bonds. There's people who understand the markets. They've got models. They've never really looked at Bitcoin as in a sort of serious way, like we're going to put 1, 2, 3, 5% of our money in Bitcoin. So they've got to do a little bit of due diligence, or actually a lot of due diligence, before they even come to that decision, because they've got fiduciary duty for a lot of money, and nobody wants to lose their job because they bought Bitcoin and it turns out to be a scam. It's not a scam, but they need to get to that point. So we forget that as Bitcoiners. So I think this process is now, we're now, 5 months into this process where we're just starting to see some of these places like Morgan Stanley. There's news, and not quite news, but there's rumors that they may be close to accepting Bitcoin on their platform. So this rollout phase is just getting going right now. And I think this is very, very bullish, right? And it's not just bullish over the next 3 months. It's not just like a little hit. No, this is bullish over the next 3, 4, 5 years. So, I think we could really be in for a very long secular bull market here. This could take us much, much higher.
Meanwhile, Galaxy Digital CEO Mike Novogratz recently told Bloomberg that Bitcoin could reach 6 figures as early as this year. He attributes this potential surge to the influx of major institutional investors, noting a scarcity of sellers. If Bitcoin surpasses the critical $73,000 level soon, it might reach $100,000, with even higher prices not ruled out. Novogratz noted that the current range bottom is around $40,000, with $70,000 marking the top. Bitcoin has been fluctuating within this range recently, unable to break past $70,000 despite multiple attempts. While congressional hostility was once seen as a significant obstacle for Bitcoin, Novogratz now believes recent developments in Congress could actually boost its prospects. DC has finally acknowledged in principle that crypto legislation has to happen. That it should be bipartisan. The last few weeks have been unbelievably positive, he stated. Interestingly, Novogratz had doubted the likelihood of regulatory clarity for the crypto industry just a few weeks ago, but now sees it as imminent. He also views ongoing government spending as a positive sign for Bitcoin. Meanwhile, Tom Lee of Fundstrat predicts Bitcoin could soar to $150,000 this year, citing factors like the halving event, successful Bitcoin ETFs, a growing user base, and decreasing inflation as reasons for his bullish outlook. Considering all of this, what price targets are you expecting by the end of this year? Share your thoughts in the comment section below, and continue the discussion. If you found value in this video, don't forget to give us a thumbs up, and subscribe to our channel for more insightful discussions on cryptocurrency and finance. Thanks for watching. We hope to see you again. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.